What is the bull case, before we get to Ethereum, what is the simple bull case for Bitcoin when we're already at 111,000 price at the moment?
Well, Bitcoin has done very well over any 10-year period. And at $100,000 today, it does reflect that institutions are beginning to view this as a legitimate way to store value.
Bitcoin isn't just surviving, it's proving itself every cycle. Institutions are finally waking up, and with supply fixed, every new buyer drives scarcity. Tom Lee believes that this isn't the end of the run. It's the beginning of the next leg up.
Because the Bitcoin blockchain is really one of the best ways to record financial transactions with 100% never failed censorship resistance, never fraudulent entry in its entire operation. So, but institutions, only about 5% actually own any Bitcoin, but 95% of Bitcoin has already been mined. It's a fixed supply. That's a stat from Bitwise. But that 5% that isn't held yet, because the other Bitcoin is basically being hodled, it has to be acquired by those 95% of institutions. Plus now governments want to own Bitcoin as a strategic reserve. So if you think about how difficult it is going to be to acquire that last 5%, I can see why it would replace gold or equal the network value of gold, which is over 22 trillion, and that would put Bitcoin at around 1.2 million per Bitcoin.
Because the network value of Bitcoin today, I mean, people sometimes use the phrase market cap, but so the total value of all Bitcoin out there is what, 2 trillion. Talk me through, I mean, obviously the limited supply argument, I think pretty much everyone gets in a sort of fiat currency world. In the short term, if the president continues to interfere with the Fed, is that a short-term catalyst, or are these strategic long-term arguments for Bitcoin what really matters?
It's in the short term, it's probably unclear if it helps or hurts Bitcoin, because Bitcoin also is correlated with global monetary liquidity. Raoul Pal at Real Vision put up this chart years ago that shows M2 versus Bitcoin, and it's been almost dead on at all the bottoms and tops. So once we would be through Fed interference and the Fed is easing, of course, that's good for Bitcoin. But in this period of risk off, I would say it would hurt stocks and Bitcoin.
What is the case for Ethereum then over Bitcoin?
Well, Ethereum differs from Bitcoin. Actually, Ethereum was initially a fork of Bitcoin, by the way, but with an added feature, which is smart contracts. So what they wanted to do on Ethereum was to say, let's use blockchain technology not just to store value, but now to store information. Ethereum is as a smart contract platform, actually also has something called the EVM, Ethereum Virtual Machine. So you can run entire programs and conditional contracts on Ethereum. And Ethereum itself is 100% reliable. It has not had a single moment of downtime since inception. It's one of the few blockchains that has never been down. And then if you needed to do more things on Ethereum, you can build what they call layer 2s on top of it. So Ethereum is essentially infrastructure that now is catching the attention of two industries. The first is the financial sector. The stable coins became really a breakaway product for crypto. And that's like the ChatGPT moment. There's $250 billion worth of stable coins. The vast majority of those are minted on Ethereum. Then the Genius Act was passed by this administration and this Congress, and that greenlighted the proliferation of stable coins onto the blockchain. So banks are now building stablecoin products. That Treasury Secretary Besant thinks that could get to 4 trillion. That's exponential growth, burning gas on Ethereum. And then we have Project Crypto, which is the SEC wanting Wall Street to build on the blockchain. Now, all of that collectively, from a Wall Street perspective, is like 1971 for the dollar. And what I mean by that is, in 1971, the dollar went off the gold standard. So in 1971, the dollar became synthetic. And gold was what people bought as a hedge against that synthetic dollar. So you had gold as the trade, and that would be the Bitcoin equivalent. But actually, the synthetic dollar is what created the rails for Wall Street to build all their future products. The futures, curves, derivatives were all because the dollar was a synthetic product. If the dollar was backed by gold, Wall Street would be still a very small business. Well, Wall Street now is going to be building its entire infrastructure onto the blockchain. And the blockchain they're choosing is Ethereum. So this is the 1971 moment where Wall Street is essentially capitalizing on tokenizing the entire world onto a blockchain. That's a huge opportunity.
What Tom Lee's saying here is massive. Wall Street is literally rebuilding its foundation on Ethereum. We're watching the 1971 moment for digital assets. The same kind of financial revolution that created modern markets. Tokenization, AI integration, and global liquidity are converging right now. Most people still don't see it, but those who do are positioning early in the next trillion-dollar wave.